Hi there, welcome to your class. My name is Gloria Adoye. I'm popularly known as the Pips Grabbing Chick, and today I'm going to be teaching you pips and how to calculate it. Last time we talked about the bid price, the ask price, and the spread, and I said these prices are those prices that the broker automatically factors in to charge you the minute you place an order. Today we're going to talk about pips and what it is. Last time you learned that a broker could charge a spread up to 2 pips or some up to 3 pips, and that is very important that you trade very low spread instruments. Like Euro USD has very low spread because it is heavily traded, and other currencies also have very low spread. Basically most of the major currencies have very low spread because the dollar is heavily traded, and some of the currencies have low spread, but the exotics tend to have very high spreads. So what do we mean by these high spreads? These high spreads, the reason why they are high is because they're based on pips. Sometimes the pip is higher, 2 pips, 3 pips, 5 pips, blah. So that determines the amount of spread that's being charged. Okay, so what then is the pip? The pip is simply the unit of measurement, right? Pretty much like you measure time in seconds, all right? You measure days and months and years and all that. So in Forex, it's what we call the unit of measurement. So for every time the market moves, it's measured in pips, which simply means price index point. So it denotes the movement in price. So the market moves a certain period or a certain point, that is 1 pip. So it moves from 0 to 1 pip, from 1 to 1.2, 2 pip, from 1 to 1 pip, like that. So for every time the market moves, it moves in pips. So when you're looking at a currency pair, the pip is usually seen as the 4th digit. So say you're looking at a currency that has the price pegged at 0.1234. 4 is seen as the pips, that's 4 pips. So for every time the market moves from that, it moves in terms of pips. Good. There are some technicalities involved. We're going to learn those technicalities as we proceed, all right? So for the currencies, mostly the majors, the exotics, the pips is often seen as the 4th digit after the decimal, while the pips for the yen or the crosses is often the 2nd digit after the decimal. You know how we said the crosses are mostly those instruments that are pegged without the dollar, and mostly pegged with the yen. So all JPY, Euro JPY, GBP JPY, these are mostly seen as crosses. So when you're calculating the pips for these ones, it is not the 4th digit, but it's the 2nd digit after the decimal. You're going to find out all of this as we proceed. So the pips, it has a manual way of calculating it, but in the Forex chart there are ways that you can always know. TradingView has a ruler where you just move from one point to the other and know the number of pips. MetaTrader 4 also has an instrument that you use to measure the number of pips, so you don't have to go calculating it all the time. But say you want to do it manually, here is how you calculate the pips. So say you sold Euro NZD at 1.67910 and you closed at 1.671 blah blah blah, all right? So of course you're selling, you're going down, you're plummeting. The price is reducing because that's a sell. So this was the price you bought at 1.67910, and you're closing out at 1.671. So that's the profit. So how many pip profit did you make from the transaction? So here all you just have to do is take the value, the first one, and minus it from the second one. It doesn't matter how you arrange it. It could be the first one and the second or the first. It doesn't matter. The bottom line is that take that and look for the difference. Okay, if you take the smaller one and you minus the smaller value from big value, you get a negative, but that negative is irrelevant. You could take out that negative, just take the figure, and when you do so, you're going to get 0.008. So you want to confirm this? Good. Pick up a calculator and type 1.67910 minus 1.67110 and see what pops up. So that's 0.008. So recalling that the pip is the 4th digit. Remember how I said the 4th digit? So we either move the price 4 digits from the decimal. So 0.008, move it 4 digits from decimal. So when you move that, you're going to arrive at 80 pips. or you could just divide it by 0.0001. That is 4 decimal digits. You're still going to arrive at 80 pips. So say you didn't get this value, you got 0.00 any other value, just take that number. That is a whole number. That's like a standard formula. That's 0.0001. Okay, so whatever you get, instead of you having to do the movement, just take 0.001 and divide that, and that's what you're gonna get. All right, so we're going to try another one. So say you bought GJ, so let's take a cross now. For example, remember how we said the cross is the second digit while the currency pairs are the fourth digit. So now we're going to take a cross. So say you bought GJ at 141.228 and you exited at 142.961. How many pip profit did you make? Yeah, are you calculating it? Remember how we said first step, look for the difference. Good. So that's what we did first. Look for the difference, okay? And then that's what you get when you look for the difference. 1.733. Good. Now slide it 2 digits after the decimal, or here's the standard, 0.01. Just simply divide that value by 0.01. If you do that, you're going to arrive at 173.3 pips. Yay, that's the price. So what does that mean? It means you made all this money. And when we talk about lot size in the next class, you're going to know what this translates to. This translates to a lot of money. All right, 173 pips, boy, that's a lot of money. So even if you're using 10 cents per pip, that's still a lot of money. You're using $1 per pip, that is still a lot of money. So remember, the pip is simply price index point. So for every movement you move in price, you're making that amount of pip, or you're losing, as the case may be. So do I need to do this every time I want to trade? Really, I'm gonna have to start doing the math. I'm not very good at math. I flunked math in high school, in nursery school, even in my mother's womb. I didn't know math. Okay, good. No, you don't have to do that all the time. Yeah, you don't have to do that all the time, because like I said, every platform has its tool that you can use in measuring the pips. And by the time we begin to go into the charts to talk about all the meanderings of the charts, that'll probably be towards the end of this whole module. You're going to see how you can use one of the tools in TradingView or on the MetaTrader 4. You're going to learn how to use any of these tools to measure the pips. So you just know right off the bat that I'm going to take a 10 pips transaction, or I'm going to take a 20 pips transaction. Now take note, knowing the pip value is very vital. You cannot ignore this. This is a very vital aspect of your class. Why? Because you need to know the pip movement to know the number of stop losses you're going to take and the number of profit that you're going to take. You will get that or learn that when we start talking about lot sizes and risk and money management. Okay, so you've learned about the pips. You've learned about the pips for the crosses. Remember, the pips for the currency pairs is the fourth digit after the decimal, and the standard value for you to divide the figure with after looking for the difference is 0.0001, and for the crosses, that's the second digit after the decimal, and the standard value for you to divide it with is 0.01. Once you do that, you will be able to know the number of pips that you want to go and how you can begin to set your appropriate risk and money management. All right, and there's one more thing that you need to know, just for you to know, because most brokers don't even add it. It's called the pipette. Pipette is simply the fifth digit. All right, most of these pairs are often quoted in 4 decimal places because most brokers ignore the pipette, but there are some brokers who quote it. Like you see an instrument having lot, while some brokers just put it in the what's the word now, as an index. Like they just put it at the top. Like you just see 1.4567 and you just see one tiny number at the top. What's the word? Is it a decimal? No, it's not a decimal. Like a factor, x square and all this stuff. So you just see it there like that. So they don't really count it. So when you're doing your calculation, you ignore the pipette, pretend it's not there. So if the value is 1.6798, just take that 1.6798. Don't go taking that approximated number or that index number. They ignore it. So the pipette is to be ignored because it doesn't change price and it is often ignored. So what have you learned? You've learned that the pips is a price index point, and is the movement, every movement that the market make, that's the pip. 1 pip, 2 pip, 3 pips, and it is often the difference between the entry price and the exit price. So when you calculate the difference between the entry price and the exit price, and then you divide it by 0.0001 for currencies and 0.01 for crosses, you will get the number of pips, and knowing the number of pips will help you know how much profit you plan on making and what your stop loss will be. So that's all for today's class. I'll see you again in the next one, where we're going to talk about lot sizes and how you can begin to manage your money and calculate your risk. I'm Gloria Adoye again. See you next time.